going on. We need to see what the market conditions are. Number one, we have here like just a very powerful trend so far in the markets. We're running up the 9 EMA, and all we've got is just like a nice kind of beautiful trend at this point. It's going to be, this is a bullish market. So we had a range from July till now. Range bound markets require strict day trading, very quick trades, and your entry and exits have to be perfect, but you let the volatility of the market play out. You can't really swing trade very successfully in this type of market unless you're just playing the range, where you're essentially doing anti-trend trades. So counter-trend trades where you're just playing the range. So it's buy low, sell high, buy low kind of thing. Now that you're riding up the 9 EMA and you broke out, we enter a different type of phase in the market. This type of phase is a bullish phase. Or if you're thinking about the 4 phases of the market cycle, this type of phase would be what's called a run-up phase. You have run-up phase, run-down phase, distribution phase, accumulation phase. Each phase is traded differently and trade different stocks during them. So now we're in the bullish phase. This is like your good old-fashioned bull market phase. Okay, yesterday was your quintessential bull market day. See how the market kind of gapped down big on, not big, but it gapped down on some kind of news, and then immediately after like the first 5-10 minutes, it was bought up, and you started to see a run in all these stocks. You could see how all these stocks, like, they opened down and then they just ripped. You had a lot of stocks at the open, they opened down and then they ripped back up. So that is like what happens in a bull market. The weaknesses in the market get bought, and you start to really shred back up to the upside on all types of weaknesses. In the past, if we had this type of move, like at the open, say like you gapped down and then like you even broke under the VWAP here. In the past, like we would have just if this was a month ago, we would have just shorted it and shredded it down. But you don't get that kind of follow through in this type of market because the market conditions have changed. So you have to change too. I love shorting. It's like much more fun for me than, longing stock, but we haven't been able to do it as much because that's the nature of the market right now. So let's just be mindful of those things, be cognizant. So when you think about, the market, there's a market awareness that has to go on, right? Like, what do I understand about the market? What's happening? That's always really important in terms of like where you're going with this. So let's get into the gappers, and we'll get into the game plan, the regular stocks. Brew, this is a buyout. Leave that alone. KD, MN. So for you guys that like the small caps, this one actually looks decent. What do you notice about this thing? And you can see here, like, if you look at a weekly chart, you're kind of coming out of a big base over here. You're gapping up in this range. You probably got room to like the 430s. Now, the issue on this one is, it got popped up hard pre-market to 425. Now it's just kind of sitting around. When you look at something like this, you've got to make sure like it starts to come out of range before you take some type of ORB or anything like that. So this one, I would put this on the watch list if you like to trade small caps. You can see here, like, you got 1.49 million shares in volume. Usually, like, if you're going to trade a small cap type of stock, you would need at least, I find the best ones, like, they do about 1 million shares in volume pre-market. If they're not doing that, then you're not going to really be able to, get anything going. So, million shares is kind of, at least this year, been what you need to see before things start to shred. So I would add that into the watch list on the gapper list if you'd like. I'm probably not going to trade anything like that, but we'll add it in. I'll watch it for you guys. You know my rules on these kind of things. LTS. This one looks like it's a buyout. Pass. SNCR. So you can see SNCR. Big gap on this bad boy. What do you see over here? So this is the issue on this. So like, say this stock's got earnings out or something along that end. Okay, that's fine. But like, it's popping up on this news. The daily chart is going to be a little bit in a weird spot. So you see here, like it was at 625, dropped to 375. Now there's news out, but it's taking it right back into essentially a resistance spot. That's not an ideal type of play, at least for me. So I leave that kind of play alone. AMRN has some news out. AMRN study shows cardiovascular, blah, 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 blah. Yeah, you got a little bit of a gap to fill here to 21. So I would put that on the watch list. I would put that on the watch list. And they just had earnings out a couple days ago. You're breaking over the 200 SMA, which is important. I think that this one, I definitely want to put this one on the watch list. Hold on here. I got to raise my desk. All right. There we go. As I get older, I like to have my arms a little bit higher. You know what I mean? Know what I mean? All right, cool. Man. All right, cool. So AMRN, let's add that in. Oh, that's too high. There we go. All right. Ooh, now this bad boy. What do you see on this bad boy? SE. SE is going to move a little bit better than AMRN. So if you look at AMRN, you've got a nice gap on it. The issue on AMRN is float. It's got 348 million share float, so it's going to move thick. What I mean by thick is, right, if you get into the 150 to 200 share float kind of names, they can move, but they grind. What I mean by grind is like if you ever see AMD move, you know, when it starts to go, like it won't do its whole move. Like you would think that AMD moved 10% yesterday, the way its trend was so strong. But it just didn't have the juice. So that's where, you know, we've got to be just super mindful. Like this is going to be, AMRN is going to be a little bit of a grinder. A grinder stock, you got to hit it on dips. So what would we do? Like, what do we mean by dips? So you got a $3, $4 gap on this thing. What we want to see at the open is either pull back close to the 9 or 20 EMA, let it hold somewhere, and then we'll explode back up. That's when we're going to get this pate going. So I like this one, but not as much as SE. SE is actually really interesting. It's going to move a little bit better. Its market cap's about $2 billion less. You've got yourself coming out of like a longer term, you can see here, longer term kind of downtrend. It's been starting to trend after it hits 200 SMA. You know, this thing could very well get right back into highs. We're going to have to wait for it. It's up a lot, $5, $6. This is a stock, it moves well enough to do an ORB, right? What's an ORB? What do you need to see for ORB? You need to see 3 candle pattern, right? 3 candle pattern for ORB. That's really important. So add in SE. This is going to look pretty good. Chem, woo! Man, I haven't heard from Chem in years. Chem serves following $1.8 billion bid from Taiwan's Yagi Yo. Yeah, that's going to be a little bit weird. Yeah, I can send you the layouts. Hold on. If you need the layout, just click this link. It'll have all the watch lists and everything in it too. Boom, 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 boom. Good. So this one's a buyout. A buyout means we're really not going to be able to do anything. Let's leave that bad boy alone. The volume is not low on SE. You know, it's 390,000 shares, which for a $36 stock is actually quite a bit. You can see here, it's only the small cap stocks that really need to have like $1 million plus. Regular stocks don't need that. Rockwell Automation. Look at this. Q4 revenue beats street. Shares up. Sounds good. 110 million share flow. $21 billion company. So it's going to move okay. Good thing on this one is what are you starting to notice here? Let's look at the weekly chart. test, 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 test. So you got 1 test, 2 tests, 3 tests, 4 tests. Now you're breaking out of this longer term trend line. It goes back to 2018. We're almost done with 2019. So it's a 2-year range break. That's important. The longer the range break, the more powerful the move can be, at least the secondary and thirdary moves. I'm pretty sure thirdary is not the proper vernacular, but we're in that game. So now that you're over this, if you can stay over this 200, you've got room to 210. The issue on this one that I see personally is, number one, we haven't been trading this stock very often. Diversified materials, who knows what that even means. You do got nice pre-market range. The key is going to be like, what does this stock move like? So what we got to do is look and see, okay, in the past, how does this stock move? Does it ever have big days? So you can see here it went from 156, 166, so that's good. This day went 152 to 160, that's enough. So we have, I want to always check when I see these things, is there a possibility of it making a move the way that, I would need it to move? When we are trading, right, we need to make sure that stock can at least get $1 or $2 out of it for us. If you have 100 shares, you can rip $2, that's good. ACST. Man, this one looks, I know a lot of you guys probably like something like this. This one can be really tricky. Unless it holds over this this trend line here, it probably can fade. Haha, Clutch, it's all good, man. It's all good. No apologies here. Unless you grab my mom's butt, you would never owe me an apology. Actually, you wouldn't even have to do it for that. No, I'm just kidding. Now, Richter, gap up here, pass. Why? Too messy. See how this thing is, it's got news out today. It must have, but you're not really getting any action on this. Pass. DXC. Woo! So now you got, this has been in a big long-term downtrend. It used to be $100. Now, typically, we don't like stocks that are in a downtrend unless they've actually based and cleared out all the supply spots. So what I mean by supply spots is, where are your moving averages? Where are the booby traps? Where are the spots on the stock that could come into play? This is different than Richter. This is clean. You're already over the 9 EMA and the 20 SMA. Now you're breaking over the 50. You've also got a flag pattern over here. This one looks pretty good. 267 million share float, so it's going to be a little bit thick. A little bit thick. It could still run. You've got a lot of room of upside here. These kind of stocks that are neglected, that have just been down in the dumper, that people aren't really rolling with, this can have room. So let's add this to the list. Hey, Kyle, what's up, baby? All right, so let's add DXC. Ooh, go. I can't believe these guys are still running around shredding on earnings. Go. Earnings surpass expectation. Ups guidance. That's always a plus. Ups guidance is always good. You always want to kind of and I'll look at this pre-hand, but ups guidance is always good. You always want to look for buzzwords. You always want to look for buzzwords when you talk about a beat. This is not necessarily a buzzy type of earnings. For me, revenue increased 50%, earnings increased 50%, 100%. That's when things get hot. But this is a beat. It could be something. You only got 81 million share float on this. You got room up to 34. I'd add that in for now to the watch list. Good. Yeah, I'll send you guys a watch list in a sec. There you go. This is the non-gapper watch list. Non-gapper list. Bum. Yeah, you just put that right into the computer if you want. There you go. So yeah, just download it in. You'll be good to go. VOD, junk. HMI, junk. Crowd looks like it caught an upgrade. What you see on this bad boy? Could be a bottoming pattern. It also could. Hey, Boris, what's up? Yeah, crowd got an upgrade. The thing with crowd is it's probably not going to move till it might take a little bit closer to its earnings, but you could see here like it looks like a bear flag, but ideally for me, the first like one or two or three bear flags are really the most effective. Once you're into kind of like stage 4, stage 5, of a downtrend, they have less oomph on it because the volatility, you can see the volatility is contracting a lot. This stock used to move around like $5-6 a day. Now it's moving around. Put my Indiana Jones hat. Now it's moving around like 50 cents a day, $1 a day. I think this one, like you can see here, you're starting to build out like more of like kind of a wedge type of pattern here. And if you can come out of this and clear these MAs, then it's going to be golden. Till that happens, though, you're just stuck inside the range. Like you can see, like you keep tapping the top of the trend line, and then you roll back over. It's cheap. And in this market, because the market's been so hot, a lot of stocks that are like near lows or a lot of stocks that have been beaten up they're getting picked up. But this one has been a heartbreaker. Every time it bounces a little bit, it pulls back. So what we need to see here is really a shift in momentum. And that's going to start with, a break out of this kind of longer term, not longer term, but this 2-3 week range. Boris, good to have you in. Now let's take a look at the down gappers. SLDB.